Hey, what's up, everybody? This is Chef again, and we're about to do this weekly watch list. So, um, it's been a little hectic, as you guys can see. We've experienced a uh, bull rally right from the beginning of the year, and we ended the year on a red note previous year, right? We're heading into this third month, and hopefully, a lot of you guys are green out there. If not, feel free to reach out, DM us, whatever you guys got to do to get that help you need to learn how to day trade a little bit better or be consistent or find that consistency. Everybody has their specific trading styles and lifestyles that they got to mix together, and sometimes it can be stressful, especially with the way that this market has been. A lot of it, just let you guys know that from last year, a lot of it's already said and done. A lot of the reactions, a lot of the volatility is basically all said and done. The type of volatility that's happening now, it's a lot of intraday stuff and a lot of fluctuations when it comes to the data and a lot of mixed movement in the market in general. So it's a whole new year and a whole new reaction and volatility than what it was from the previous year. Last year, we were experiencing some aggressive sell-offs and aggressive uptrends, but it was mainly a lot of downtrend. But just in general, I do want to point out that we haven't dropped any lower. Okay. I want you guys to know that this chart almost looks like it's about to reverse, but anything can change. Just like I said last time, when it came to the bonds and the dollar, the oil is everything is finding its structure and its balance. Okay. Nothing is following as one in sync anymore. Everything is finding its own trend and breaking its own trend and respecting its trend. Okay, a lot of retests, a lot of breakouts and things like that. So be aware of what may or may not happen. So I want to point out two things today. I want to point out the ES and the VIX, so you guys can compare like how or why things are moving the way that they are. First of all, the VIX. A lot of you guys have questions, and I see a lot of charts out there still being charted. The VIX cannot be charted, guys. It's a fear index. A fear index means that you cannot use fear as a support, nor the lack of fear as a resistance. Okay, this is a gauge. All right, just kind of like when you put gas on your car. The harder you go, the more gas you're gonna run through, right? And when you get to the bottom, you got to fill it up. That's the way that this almost feels like. Is every time we get to these bottom levels of 15 through 18, it almost seems like it's got to get filled up again. So people look at it as a form of support, as a gauge to read that we're at a spot where we're gonna bounce back up and go green, right? No, that's not the case. Okay. Here it's fear that's based on market related economical events. So for instance, let's just say Jay Powell is speaking, and then we're right here. Of course, there's going to be a natural reaction to the upside on the VIX because there's going to be fear on whatever it was said. If it's negative, of course. If it's positive, this thing is just going to keep on trending now, whether it breaks 18 or 1849 or 1830 or the level 20 or whatever the case may be. It doesn't mean anything. All it means is that the fear is changing. That's it. Okay. There's no specific number here that's going to determine the movement of the market. Okay. Just letting you guys know that that's how it is. This is a fear gauge. So the more fear that there is in the market, the more that this is literally just going to keep on running up, right? It'll keep going and going and going. And then the market will sell off and sell off and sell off because of a catalyst, or maybe because there's some crazy stuff going on that Jay Powell said, and it's just markets breaking structure, and boom, everything just crashes, right? That's all that the VIX is for. Okay, there's no specific levels, no little patterns in between, no accumulation here. All it is that the levels have been between 35 and all the way down to this like 856. Okay, just letting you know now that this is a fear gauge. That is it. All right. So anyways, all right, I want you guys to see this. Can you grab this from last year into this specific level right here, right? And grab the VIX and do the same. Okay. Had there been a lot of fear, the VIX would have been the exact opposite. It would have been upwards. Okay. Unfortunately, this thing is all the way down, meaning that there is not a lot of fear. Okay. So that's why I'm saying it's a fear gauge only and not something to use as something to compare the market with. They don't move together on a daily basis. They're not moving in sync, okay? All right, just wanted to show you that. Anyways, let's go back to this market. The way that we started off on a green note. So technically this candle right here put us in the green, okay? Anything below this, then we're gonna be looking bearish to the downside and just continue trending down. Right now, what it's doing is we pushed up, we built a little structure down here, and I'll show you guys on that 4-hour time frame. And then it dropped down, it broke that structure. So this candle right here gave you that bearish signal. It gave a lot of people bearish signals, but look how we ended up this week. This week we ended up solid green. We're over 50% of that. And we can definitely continue back to the upside going something like this, okay? Or, I mean, we literally reject here and then just start off going red again, and then we create that trend to the downside, okay? So whatever it is, however it may be, it doesn't really matter. Our job is to day trade and take advantage of the upside and downside, right? So I'm going to go to the 4-hour because right here, there's really nothing else that I can show you other than the breakdown here and the fact that we're still above on the yearly level, right? So I'm going to go to the 4-hour because I like the full price action details. And I'm going to start from right here, okay? The way that this thing was structured from the beginning, like I said, here's that one candle that determined everything. We came back down. We did not drop any lower, but we snapped back up. We snapped back up after dropping down from this specific structure here. I think a lot of people were calling this a bull flag or something, but I mean, don't look like a bull flag to me. All I know is that we had this little structure here, okay? And we stayed up here, we created it, and then right here, this is where it broke everything. It broke that structure, it came down, and then it created this little base right here. It just wouldn't go anywhere. It literally was there for like 3 days. And then it decided to drop, popped up, and then dropped down, right? And then what happened is a lot of people ended up drawing a little wedge, okay? So I'm giving you guys the exact details of what's happening based on the chart. I'm not giving you guys details on economical events, right? The difference here is that we have to, as traders, follow the chart themselves. Why did we push up? Why are we green? Why are we trending down? Let me understand, right? I just gave you guys everything. Here was your break of base, here's your break of structure. So technically it's going to keep dropping. And after this little base that was created right here, I know a lot of people probably drew this little megaphone pattern there. I want to point that out too. I personally don't think that's even a pattern, but you know, everybody's to each their own. And then it drew this little wedgie here. And then it broke right back up its upside. And then it basically said, you know, screw all you bears. Let me just take over this whole area and let's go bullish. And that's exactly what happened, right? Somebody's going to tell you it was low volume. Somebody's going to say it was in high volume. But look at, compare the normal volume, all these levels. It's all kind of similar, right? These are the aggressive ones where it gets a little pop off because a lot of it, it's a break of structure, okay? That's it. There's no science to it. You just got to understand like what you're looking at based on the candles, what structure you have, what structure we're building. And by structure, like I said, it's a pattern, it's a base, it's accumulation, it's supply, whatever you want to call it, however you want to see it. If it's breaking, it's breaking. Go with the flow, right? Be patient and let the trade come to you, because had you not been patient here, a lot of people got stopped out these 2 days. Right? It dropped down, snapped up, somebody swung calls, they got stopped out, somebody swung puts, and you know they got stopped out, and it just gets chaotic. So you got to pay attention to what the charts are. If you're somebody who has a lot of lines on here, tons of trend lines and everything, take them all off. Redo the whole thing and just try to understand where it's going and why it's moving, and then what's the next step. What do you look for, right? You guys can see I have all alerts up here because I want to know when we start trending up here. For now, what I want to look for and what I want you guys to look for is a nice red candle, okay? This can't just stay green. If it stays green, okay, it's not healthy. I want it to come back down right here, okay? Right there. So I'm giving you these candles, right? That last candle body right here, that red one and that little green one, and then just the top of all this here, that noise. I want you guys to see this, all right? I would love for a nice red candle to do this. Like, I don't want to tell you guys that Monday and Tuesday we're going to be red, and then Wednesday, Thursday, Friday we're going to be solid green like this. Can it happen? Yes. Does it have to? No. This thing can keep on rocking to the upside if it wanted to. But what makes it healthy, what makes it a good move is the red candle and then a nice trend to the upside. So at that 40-20, that's what I'm going to use as a dip by opportunity. I'm gonna let everything adjust after that big move because it's pretty aggressive, if you ask me. Um, that's a pretty aggressive move that day, yeah, this day right here. So I want 50% of that to do this. Okay, so I'm just gonna paint it red so you guys can get a visual. I wanted to do that 50% of that, let it come down, and let's buy that dip right here. And if we get stopped out, we get stopped out. Oh well, right? You made the trade, you played the retest, you bought on a red candle, you weren't afraid to get stopped out here. And then if it goes back inside, guess what? You can go back inside at 40.20 without thinking twice. That is the beauty of having a retest structured trade. Okay, you can get stopped out on the first one, but as soon as it gets back in, you get back inside with no question using that same stop loss. Nothing ever changes. The structure of the candle bodies and the way that movement should happen is just like this. So with that being said, I'm giving you guys a great dip buy opportunity here if that were to happen. Okay, I'm not looking for 40.40. I'm not looking for 40.30. I'm not looking for 29.41 or whatever numbers you guys want to call in between. I am looking for 40.20 for a nice healthy pullback in this market in order for us to stay bullish above. Okay, so if you guys see me call out around 40.20 buying on a red candle, that's exactly what I'm doing. You guys can go back to this video and check out exactly what I'm looking for. Targets to the upside. Above 40.20, I'm going to be looking for that 40.30, 40.40, 40.50, 60, 70, 80, 90, 100. You get the point, right? Every 10 points, I'm going to trail ES, right? Which is in this case, SPY or SPX, whatever you guys want to do. That is /ES. That is the breakdown of it. That is the one thing I'm looking for a healthy market continuation to the upside. If that doesn't happen, I am going to be very cautious as to what it does up here. I don't want it to create a little base and then drop down. If it decides to create a base up here and snap back up, that's cool. But I technically would love a red candle before anything else, okay? Because this was an aggressive move to the upside. It needs a healthy pullback. All right. With that said, I'm going to give you guys a few tickers with a few levels and what I'm going to be looking at for the week, right? Of course, I'm going to look at the 4 hour because I don't need anything else. All right, first one is going to be PayPal. As you guys can see, I'm already in this trade. I have a 75 call. It's already at 75.30. I got in down here yesterday around that 75 level just because I saw it breaking and I got a late entry, which is fine. No big deal. And let me show you why I got the late entry. Okay, as soon as market opened, of course, we broke above right here. So I saw this here and I saw that it held. So I just came and bought it. I bought it around this level right here. And then I saw it drop down here. So my contract, of course, went red. I got time on it, so I'm not really worried. And then it snapped back up here. And I don't know what my percentage is. All I know is I got filled like around $2. And I think it's around 3. If you guys want to do the math on your head, by all means, it really doesn't matter as long as I follow this trend. Look at the way that PayPal has been trending to the downside. Snap down, earnings, snap down, create a base. After it created this base right here, look at the way that it ran. It ran all the way into, I'm going to say, 88. So it went from let's just say 69 all the way to 88. So the same thing is happening here. It created a base, so I'm hoping that it comes back all the way into 88 in a proper structure. Of course, any red candle, I'm going to continue to buy here on PayPal, and I'm going to trade in the next few weeks. That's literally what I'm going to be doing. So every time that this thing pulls back, let's just say like this, I'm going to buy it, and I'm looking for a nice structure to the upside. That's it. I'm looking for a staircase pattern to build on PayPal because every time we create a base, it does a nice little staircase pattern. And in this case, it came all the way down, but here it changed from this level here from December or the beginning of the year, and it just kept on rolling. So I'm going to do the same. I am going to follow its trend to the upside, and I think this is an amazing trade, right? So here's your first target, boom, which we already hit, 76, 77, 78.20, 80.38, 81.20, this little bad boy here, 82.80, 83.40, and then all the way to that top, right? All I'm doing is I'm targeting all these wicks here, all these times that it touched that trend line right there, because it dropped all the way down. So I'm looking for the upside movement, right? Does that have to happen? No. If it comes back down below 74, do you think I'll be in calls? Probably not. I'll probably be trailing my position by then, okay? But that's PayPal. The next one is going to be Disney. I like Disney in general. The only thing about this one is that it doesn't have any specific structure to it. It literally, I think it's just moving in general with the market conditions. So there's not really anything interesting about it. What I do like about it is that we did kind of bounce right here at this little base here before we ran up all the way into that 122, which was earnings. So I like this. The fact that we came down here and reclaimed that same level. I'm going to use that 100 solid level as an upside sentiment and below 100 as a downside sentiment. That's how simple I'm keeping it with Disney. I'm looking for a staircase pattern, a little base here to confirm more upside. And I'm going to keep trading this. So use a pre-market level, guys. If you guys don't know what that is, please go back and look at one of the previous videos on day trading, on how to day trade. And it literally shows you exactly what to look for. Okay. The next one is Google. Google is one of them that I'm in as well. I actually got in right here around this 92 level when it dropped here, this red candle here. And then it started trading sideways right here. It came down to 90. I wasn't really afraid because I bought time, about like 6 months out, or yeah, about 6 months. I'm sorry. So I'm looking for the retest. Man, this was kind of hard. So I really would like to retest 92. If not, it's probably just going to steal right here and go back up into 96, 98, and 100, okay? So I'm just looking for a good momentum for the upside of Google. I think it has a lot of great opportunity for movement back up, okay? Next one is going to be Amazon. So Amazon, as you can see here, the only two yellow boxes that I have is because of the supply and the demand. The demand finally broke to the downside here below, almost touching that 90. And then it snapped back up inside it, hitting this 95, so 94.90. What I want is a clear break of 98. I know that's kind of a long shot, but we're in the middle of nowhere and there's no specific setup. Like I said, I want to use right here, this 93 and 94 as a dip buy opportunity to continue upwards into 98. So that's my target by the end of the week. If we get there, if not, we're probably going to tap 100, okay? The next one is TSM. All right, so TSM. This one likes to respect its basis. So every time it breaks out of a base, it kind of moves real nice, okay? So 90 and 87, okay? Above 90, I'm going to target 92, which is this wick right here. And then 93 and then 94. Very simple, right? Nothing to it. That's it. If it drops, then we have a nice way to the downside, right? So this will be 80, 82, 84, 86. I really wouldn't want to short this, but if it does, then it does, right? The next one is AMD. I actually missed my entry on AMD. I wanted it at like 79. I was waiting for an entry here, but I was too late to it, which is no big deal. Sometimes if you're late, all you gotta do is wait for the next retest or the continuation play, whichever one, right? You never want to get FOMO and just wait for that specific setup. So this one, I'm gonna use these two specific levels as dip buy opportunities, okay? If it drops back inside anywhere right here between 79.30 and 80.30, I will buy the dip. If it stays above and continues to break its pre-market highs, I will definitely go long, and I'm going to be looking for 85 all the way to these highs of like 88 and 89, all right? I think AMD still has a lot of value and has potential to keep on going because NVIDIA has been the leading chip right now, and it's been rocking and rolling. So I'm just waiting for a lot of these chips to catch up, and I want to be there when AMD does, right? That's AMD, sorry. JPM. JPM is another one that's just been moving like real healthy wise. It's a financial and it moves kind of slow, but it's definitely worth it if you trade it. This one, if it breaks 144, guys, look at all that resistance, okay? That 144 is going to have a nice pop into that 145. When you're trading JPM, just a warning, every 30 cents, make sure you consider scaling out of your position every 30 cents. All right, I know it sounds crazy, but I've watched this name and I've traded it every 30 cents, and it's how I've been staying safe with this specific name. Okay, why? I don't know. It's just its characteristics. All right, if you guys don't pay attention to characteristics, then I suggest you should. But that 144 break would be nice. If not, look for a nice put position at 144 and ride it down to like 143 or 142. That would also be a nice put play position. Okay. Next one is TTD. This one after earnings, what I like about this is that it dropped down and it kind of based out right here. So this is the base that I'm looking for. Okay, so I am looking for the hold of 57.30 and 56.25 right there. Odd numbers, right? But anyways, I wanted to hold here. I don't want anything lower below 56. If you enter anything above 56, make sure that below 56 is your stop loss. Nothing below 56, okay? I think this one has some good potential to hit 60 and 62. No specific targets up here just because it's almost like a new trend after that earnings. So, but yeah, another name I want you guys to take a look at is OTA. This thing, oh gosh, I'm in a put position and I'm going to ride it for earnings. Which one did I take? Let me go to the trade time. 17. Yeah, I took the 17. It's at 54%. I took this 430 put. Okay. I think I'm red because I bought it for like $2. I think it was, or 190. Yeah, I think I was slightly red. Anyways, that's the one that I took the 430 put. Okay. It's about 8K in open interest. Volume's only 65, which this number has just kind of been chilling here. Okay. Why? I don't know, but it was weird. When I first bought it, there was only one person. And the minute that I bought it, it changed to number 2, which is kind of cool. And I watched it change. But this thing has earnings. I want you guys to see this chart. Look at this thing. Okay. It's a beast. It's a monster. And they're still in business. Okay. This thing may rip some more. Who knows? But to me, in my eyes, I think it needs a solid red candle just to adjust itself. And even if they do beat, I just believe that it needs a solid red candle in order for it to adjust. Okay, that's the only thing that I have for this name. I think it's way too high, overextended for makeup. And yes, they make a lot of money. Okay, women love their makeup. You know, some men do too. But man, I gotta tell you, if this thing just pulls back, just like 470 or even 440, it's gonna be a nice gain. OTA moves aggressively, guys, and it's not a name that you can just day trade, right? Let me show you the previous one. 425 to 330. That's like almost $100 move. If we can get that $100 move from 520 to 430, that would be amazing. Even if it just drops to 470, I'll be okay because it's still, I'll still be in the green because it's a 430, and the 430 is for not this week coming, but like 2 weeks from now. So I got some time on it, and I'm gonna ride it. Okay. But I am going to point that out that does on Thursday have earnings. I'm bearish on it, guys. I am. Does it have to be bearish? No. Can it push up like crazy or stay flat? Whatever. You never know. I'm just looking at this consolidation up here, and I'm hoping that it's supply so that my contract can freaking make tons of money, right? That's us hoping as traders for earnings when we gamble. Okay, so it's a gamble. That's all I want to point out. You guys decide what you want to do with this name, but in my opinion, I really do think that it just needs to freaking drop. Okay. But yeah, that's all I really got for you guys. I know there's a lot of names out there that you guys would love to see, and you guys would love me to chart. But honestly, like if you go and chart like so many names and you focus on so many names, it's gonna take you away from like what your week really is with planning your specific trades, and then you're gonna get lost, and then you're not gonna have any consistency. If you stick to your consistency, and if you stick to specific setups and specific names, then you will be okay. All right, you guys will be fine. You just got to be patient and wait for a specific setup. So for example, this one was on a weekly watch list like a couple weeks ago, right? The last time I made a video. And I said, watch out for this break right here. Once we start breaking up, look for the targets up above. And this is my next target. All these targets already hit. So you guys could have waited patiently. And then Friday would have been the day that you would have got into this trade because you saw the gap up and the continuation. This was a gap and go trade. You could have taken full advantage of this and taken it all the way to that 185 had you been prepared. So some of you guys probably weren't. You guys probably, you know, like, oh, well, it didn't break yet. It didn't break yet. Or maybe you got stopped out and you left it alone. Don't just leave it alone. Reset your alerts and get back in if it starts to break above. That's how simple it is. But like I said, if you guys don't stick to a specific watch list throughout the week, you guys will get confused and you will start looking for all these names and all these setups, and you're going to want to do all these trades when you could have just been patient enough and waited for your specific trade to be 100% comfortable and take a decent trade versus trying to take another trade and you only take 15%. And next thing you know, you close and you come back and you're like, it moved like 20 more bucks or whatever. Then you're sitting there beating your head because you missed your alert on the move that you were waiting for. If it didn't happen Monday, it didn't happen Tuesday, it'll probably happen Wednesday, Thursday, or Friday. If it doesn't happen, then guess what? Don't take a trade. All right. Just be wise and be patient. That's all you really got to do in this, in this journey of ours. The next one, guys, you guys should be able to look at CVX, XOM, and Oxy. I think these names have potential to continue on up. I think CVX is one of the best ones when it comes to risk to reward. And Oxy as well. Yeah, Oxy as well. So just look for some continuation on oil plays. Oil is still stuck in the middle and still consolidating. So yeah, still consolidating here from the last time I told you guys. Anything above 80 is going to be bullish, which that's kind of like my next alert right there. And then 82. So yeah, guys, I hope you guys have a great week. If you guys have any questions, please let me know. Remember that this is what we're looking for /ES, which is the market, SPY, SPX, whatever you guys want to trade. If you guys are in Forex, it's probably US 30 or no, that's the Dow. But anyways, you guys can figure it out, right? So remember PayPal, Disney, Google, Amazon, TSM, AMD, and Ulta for earnings, along with JPM and TTD. Okay, and check out those oil plays, guys. Don't miss them. But other than that, guys, that's all I have for you guys. Enjoy your week. I hope you guys had an amazing week. If you guys have any questions again regarding any type of trading, any trading styles, swings, scalps, ODTEs, whatever it is, feel free to DM me. If you guys want to tag me at Conservative Collectors and ask me, DM me, just hit me up, right? It's Chef. My name is Chef G on the Conservative Collectors, and yeah, I'll see you guys there. And yeah, you guys have a good rest of your week and stay green. Peace out.